Yeah, sounds good. Okay, 1 minute after 10 o'clock. Let's get things going. Good morning, everyone. I'm Clint Fraser. I'm the CEO of the Northern BC Tourism Association, and I'd like to welcome you to the next in our series of webinars through the BC Tourism Resiliency Program. But before we start, I'd like to acknowledge that today I'm speaking from the traditional unceded territory of the Lheidli T'enneh people here in Prince George. Snowy Prince George, rainy Prince George, not sure which one yet. And I'd also like to acknowledge that I'm joined by Jennifer Moore and Alex Burry from our team here, who are not only our resiliency program advisors that have probably spoken to many of you in the North, but are also assisting in delivering the webinar today. As always, if you have any questions during the webinar, we'd invite you to use the chat function or hit the Q&A button down there at the bottom of your screen. This webinar, as Jennifer mentioned, will be recorded and put up on the website for future use. You can find that at tourismresiliency.ca. It's the housing area for all information related to the Tourism Resiliency Program. Obviously, we certainly appreciate you taking the time to participate in today's webinar, which is being delivered through the BC Tourism Resiliency Network. And for those of you that don't know, that's a partnership between the regional destination management organizations across the province. And obviously we have many different tourism businesses joining us today across BC. Through this program and network, we're working to support the survival and long-term resiliency of tourism businesses in British Columbia affected by the COVID-19 pandemic. And if you'd like to learn more about the many different supports being provided, again, you can jump over to tourismresiliency.ca to find that information. I'd also like to acknowledge that the BC Tourism Resiliency Program is funded in partnership with the Ministry of Tourism, Arts and Culture, Island Coastal Economic Trust, and Western Economic Diversification. We're certainly very thankful for the support in delivering this program. So let's jump to it. Today's webinar topic is insurance, what you need to know. Certainly many in the tourism sector have been experiencing dramatically increasing renewal costs. That's if operators and businesses are even able to renew some of their policies. Certainly the pandemic has amplified and heightened some of these issues. And, you know, we all know that insurance is complicated and few people, you know, truly understand it. It can be overwhelming in some cases for business owners to read and comprehend the policy information your broker provides to you. And certainly this webinar is designed to arm you with some additional knowledge to better navigate this important aspect of your business, as I mentioned, especially during these challenging times. So some of the topics that we're looking at covering today, current insurance market and why it matters, coverages available and required, role of broker and importance, potential COVID-19 coverages, and an update on TAIA BC's advocacy role regarding insurance. And today, which is a little different for the ones we've been hosting, but we have a couple of presenters lined up that I certainly have the pleasure of introducing. So first, Craig Burkhardt is the National Lead Insurance Advisory at MNP. Craig is an experienced lead partner with a demonstrated history of over 20 years working in forensics and litigation support. He is MNP's national leader of insurance advisory, and Craig has extensive experience directing and managing complex damage quantification for litigation, business interruption claims, and disaster recovery assistance, both in Canada and abroad. And of course, a friend and colleague of mine and many in the tourism industry, Walt Judas, who is the CEO of the Tourism Industry Association of BC. Walt has been involved in the tourism industry for some 25 years, having worked at BC Pavco, Port Metro Vancouver, and Tourism Vancouver prior to joining TAIA BC in May of 2015. As CEO, Walt's responsibilities include leading multiple advocacy files, building relationships with members and industry stakeholders, communicating the value of BC's visitor economy to various audiences, and setting the strategic course for TAIA BC. And I wanted to mention that Walt and the team at TAIA BC have been working extra hard throughout the pandemic, advocating for industry support on many of the files that are important to the tourism industry's recovery. And certainly just wanted to thank you for that Thank you for that, Walt. So with that, I'm going to turn it over, and I believe Walt is going to kick us off. So welcome.
Thank you, Clint. Really appreciate that introduction and appreciate the work that you're doing on behalf of your region. Northern BC Tourism has been integral to providing government with the information that they need to make decisions that affect our industry, particularly in the context of the pandemic. So Jennifer, if you could move to the slide deck, that would be terrific. I'd like to just begin with, Clint alluded to the work that TAIA BC does. So if you can go to the next slide, these are some of the issues that we've been working on since day one. Really, first and foremost, we've heard from operators around the province right back to March that liquidity is the biggest issue, trying to find the means to stay solvent during this very difficult time when borders remain closed, travel restrictions have been in place, gathering restrictions have been in place. The lack of customers, the lack of revenue, et cetera, has led many businesses to be on the brink of closing and certainly unable to pay their bills, their fixed cost expenses and otherwise. So that's something that we have brought to government's attention. And as you know, a tourism task force is working through some of the issues and some of the recommendations to government on further ways to assist. The relief programs that are in place already are quite extensive, but not all tourism businesses are eligible. And therefore, how do we ensure that the criteria is eased or that we see more tourism businesses able to take advantages of the relief programs in place? And the last one that I put in there was insurance coverage. And Clint alluded to it and already provided a briefing of some of the challenges. This list, by the way, I've only included 4 things here, but it's usually 14 or 24 things that we might be working on at any given time. But insurance coverage is definitely a major issue now, and this has come up from time to time, but it's really coming to the fore, particularly as we encroach on the end of the year and many insurance packages are due. So if you can go to the next slide, Jennifer. You will note some of the things that we've been hearing, and this is probably very familiar to you. I'm sure you as businesses are experiencing the same. Some businesses, when they have gone to renew their policy, have seen an increase as much as 4-fold in premiums. And that really puts these businesses in peril. If you're used to paying, say, $25,000, you're now at $100K. That is a significant expense that you cannot afford, and therefore many businesses are considering whether they have the ability to stay open or not. Because of floods, fires, weather events, and so on, not to mention COVID-19, we are told that underwriters are bailing from the hard-hit tourism sector because they no longer consider our industry to be a good risk, and the claims have far exceeded market investment returns. And Craig, I'm looking forward to your remarks because you'll shed some more light on this, to be sure. If you can go to the next slide, please. So what we're seeing now, and I just heard from the BC Hotel Association, who said 44 of their hotels have applied and been rejected for insurance thus far. Now, they may find the means to be able to obtain insurance, but as I mentioned, it's very expensive. So some businesses will close now if they can no longer afford the premiums, or in the event they face a lawsuit of some kind, liability, they're being sued, they'll close then because they, again, they're just unable to be able to afford both the current premiums and any additional coverage that they may need. So one of the other implications of this is if you go to apply for a loan from the charter banks, obviously they want to know whether you have the appropriate insurance coverage. And if you don't, you'll likely be rejected for that loan. Businesses are often not covered for pandemics, and that's the fine print that many people are unaware of. And again, Craig's going to shed more light on that. And Also, something that we've heard about across the board from many sectors is that trip cancellation insurance is ineffective. And right now, this is putting operators in peril. It's the operators that are forced to cancel trips for their guests who are expected to arrive now or in future, simply because borders are closed. And so therefore the operator is on the hook for whatever expenses incurred to date. Next slide. So this is just a summary of what the impacts are. Obviously, increasing insurance costs, difficulty securing industry relevant liability insurance will lead to more businesses that will be closed now and in future. Next slide. So some of the advocacy efforts, insurance is a very complicated industry. It's largely regulated at the federal level, but there is also provincial responsibility. And my colleagues and I from across the country, that is tourism industry associations in every province and territory, have gone to the federal government with a request to more closely regulate travel cancellation insurance, or at the very least, protect those small businesses that are left holding the bag for some of the expenses that they've incurred for, say, pre-bookings and refunds that they need to offer to guests. Yet the closures were done because of federal government initiatives and through no fault of the small business. So those are the kinds of things that we've been advocating for. If you can go to the next slide. We've also been speaking with the Insurance Bureau of Canada, who has, as a part of its membership, many of the insurance companies. They have recently put out this National Commercial Insurance Task Force that we will be a part of, as will colleagues from across the country, to have a discussion with tourism sectors, tourism businesses, insurance companies, et cetera, to learn about the challenges different sectors are experiencing, but more importantly, looking at possible solutions and incorporating that feedback into a final report that can be offered not only to the insurance industry, but to government as well for recommended challenges. If you can go to the next slide, this is really some information that the Insurance Bureau has given me to encourage businesses that are having problems either with renewals or questions or whatever the issue might be, to contact them directly, and they will try to provide some guidance as best they can. So that's really a very brief context of what we're hearing, some of the efforts that Taya BC and others are doing on behalf of business sectors. But on the other hand, there's much more work to do, and we're looking forward to hearing where Craig can shed some more light on what our industry is facing and how to resolve some of these issues or what to look for. So I'll leave it there, and thanks again very much for the opportunity to be with you today.
Thanks, Walt. I know the work that you're doing on behalf of the tourism sector is really important, so we appreciate your efforts. Now I'm going to turn it over to Craig, who's the national lead on insurance advisory with MNP.
Excellent. Thanks, Jennifer. So thank you for having me here to present this important, not well understood topic to you. I'm going to share some slides here. All right, so the topic at hand, as we know, is insurance. For most people, it's not particularly exciting. We don't spend a great deal of time considering this topic until something goes wrong. And you know, it wouldn't be hard to see as if we performed a test here and you put up your virtual hand, if you actually read through your home and auto insurance policy fully, I'm willing to bet there would be very few hands raised because it appears to be written in another language, and assuming all goes well, it shouldn't matter. It shouldn't really matter what is written in those words and in those terms, because it's really just a peace of mind. Unfortunately, as we have seen and all experienced, it hasn't all gone well. And therefore, this once boring topic has now been, as Walt said, kind of thrust into the forefront of people's minds and oftentimes into the forefront of people's of businesses' survival. So I won't spend a great deal of time on myself. There was introduction. I have over 25 years experience, started as a CA, chartered accountant, and then used that financial side to go into the insurance world of expert in insurance loss quantification. And in that role, we prepare claims. We prepare insurance claims on behalf of companies, and therefore I have prepared hundreds of claims for billions of dollars, and many of those are in the hospitality and tourism sector. So having prepared these claims, we've seen firsthand the issues that exist with coverages, and of course what that means when something goes wrong. As Clint mentioned, the agenda that we have has got 4 topics on it: the current insurance market, coverages available, the role of the broker, and to everyone's interest, potential COVID-19 coverages. And in discussion with Northern BC Tourism, these topics reflect the most important and burning issues that operators have at this time, of course. And the time permitted, it really is, of course, it's just a crash course. There is more depth to each of these topics for sure, but I do hope to address some of the most important questions that exist in these topic areas. So first, the current insurance market, and why this current insurance market matters, because you may see the results of it, and what you're seeing is some of the implications of it, but it's important to understand how it came about and where we're at in the first place. So in the overall scheme, the industry had been in a soft market for a period of time. And of course, markets oscillate between soft and hard, but there had been a soft insurance market for many years. So over 10 years, 12 years of time had been a soft market. And what that soft market means is in a supply-demand balance, there's lots of supply. There's a great deal of underwriters, there's greater capacity. Because of that greater capacity, there creates a great deal of competition. That competition means the terms, your policy terms and your associated policy premiums are good on a relative scale, they're low. And what it also means, quite importantly, is the contracts themselves and the policies are quite flexible. So they willing to bend, if you will, or not follow through on all of their own requirements to insure in the first place. They'll let renewals just happen year after year without a great deal of additional information, without a great deal of hoops to jump through. You just renew and you drive on. And that's what the soft market had looked like for quite a period of time. And then unfortunately, about a year and a half, in some cases, early signs, perhaps even 2 years ago, there was a shift and a change. So independent of COVID, this shift was happening, and this change was happening into the hard market, and we are heavily into a hard insurance market right now, of which COVID only exacerbates that market, as Walt was saying. But what that hard market means, though, is, or how we came to it, is because there had been a lot of catastrophic losses. And in this context, insurance is really a worldwide industry. It is not a particular geography or a city or a province or a country. It's a worldwide industry. And on a worldwide scale, both Alberta and BC have contributed to this. We have seen some massive losses, whether that's through fire or floods or large events that have happened that we all know about. There have been very significant losses. And what that means from an insurance perspective in terms of payout is they're always hoping to achieve less than 100% payout, meaning that the premiums they collect go out perhaps as 100% or less than 100% in paying for people's losses. And the way that they make money, the way that they have their viability is through investment returns. So in collecting those premiums and having that giant bucket of money and funds in there, it's the investment returns that are their true return of their business, and they hope to keep a low loss ratio. Unfortunately, that has not happened. So the loss ratio in many companies, which is public information, you can see in a lot of them is over 100%. So they're paying out more than they are receiving in premiums. And when you combine that with an economic environment of low investment returns that we are in, and we see and we experience it, it means that there's less operators, less capacity, less desire, and therefore they pull in. They pull in and are now of a picking and choosing perspective of what risks they do want to take and what risks those underwriters don't want to take. And unfortunately, and I've seen this in many companies, many operators, one particular hard hit in that area is operators, hospitality, tourism, where it's taken a brunt of that, where there isn't that same desire to underwrite those associated risks, and therefore much harder to get coverage, and in some cases not getting coverage, not having that coverage offered at all that had been in place. So this current insurance market is, as I said, the hard market, and it really does matter in the context, and especially when we get to our COVID conversation. So I want to touch on now, because it's not super well understood, and you might not have been 100% informed by your insurance broker, but what are the coverages? What do you need to have, and what should it look like? There is, to some extent, an endless supply of that. So I'm just going to touch on what the main ones are. In terms of coverages that are relevant, there's two main boxes: third-party coverages and first-party coverages. So third-party coverages, actions that have taken place that you become liable, like slip and falls, or something has happened on a product liability, or where you're getting sued because someone was injured or has sustained a loss. Those are third-party coverages. First-party coverages are obviously just that, coverages to your own assets, your property, equipment, supplies, perhaps crime, employees, fraud, those sorts of things. Cyber is very much in the news right now. And then business income. And I want to highlight that one distinctly separate from the others. And the reason why is because every single year when the underwriters do their surveys and do their tests, it is constantly ranked as the #1 issue. It's the most complex area. It's not well understood what is business income coverage. And yet, for many companies, it's the most important in terms of survival, because if something were to happen to a business and there is no business income coming in, then how do you pay your bills? How do you survive? So it's a very, very important area, not very well understood. Now, what's important about these coverages is some are mandated and some are required. So you will not get financing, as you know, in lending without guaranteed coverages. So some of the coverages you have no choice, and you have to get, and you want to have, because it's covering yourselves, obviously, from a liability perspective. And some coverages are optional, or they're not specifically mandated by lending. And therefore there is some consideration of what companies should and shouldn't have in that regard. Unfortunately, most companies don't have a bucket of load of cash sitting around in order to cover a potential issue, so they turn to insurance. That's the whole point of it, is the peace of mind, is the fact that if something were to occur, I'll get payment and I'll survive. And that is really a point here now that's becoming harder to do as there's less capacity, and you're seeing your renewal premiums significantly go up, as Walt was saying. I want to touch now a bit just before getting to the COVID side and everything surrounding that on the role of the broker. And again, kind of like the insurance market and the hard insurance market, the role of the broker really is important to understand for your consideration in terms of the value that you are getting out of it. And really the main point at the end of the day, as we look to the activities of the broker, what they can and can't do for you, what it looks like, is the understanding that, not well understood understanding, that not all brokers are created equal. And there is a vast difference between what some brokers are doing and what others are not doing. And that may not be very well understood by operators, having not been in that industry, not in that area, and don't know necessarily what a good broker looks like versus a not as good broker. But we see all of that from the perspective of policies, and because not all policies are created equal, all policies are very different with a huge range. There isn't a one size fits all. So that broker's job is to get you a policy. Unfortunately, that policy has a great deal of variability to it. And your policy might look very different from the person besides you's policy, and you wouldn't know that unless you were specifically identified to you or that you were involved in the direction of that policy. So some of the roles of the broker is obviously to be knowledgeable. So they should have answers for you about questions on risks and about what you should do about those risks. Obviously, their job is to get you find the appropriate coverage. Again, not an easy task because they're the ones who are, for the most part, directing that appropriate coverage. And you need to be the one asking the questions as to what is there, what's available, what does it look like. They should be finding the best deals. They should be interpreting the policy for you. Unfortunately, what I can say about that is, again, when it kind of comes to the business income side, it is not well understood. It's not well understood by brokers. And I've found very few exceptions to that in terms of brokers who really, there's too much to know, if you will. So they know certain things really well and they don't know other things very well. And it's hard to know the questions to ask them in that realm. But they don't often know business interruption insurance and business income coverage because it's complex and they're not well versed in that area. Negotiate with insurers. I want to touch on this one a little bit because also what might not be very well understood in the industry is there are independent brokers and there are brokers who are not independent. Some brokers are owned by insurance carriers, by insurance companies. And there can be a significant positive to that from the standpoint that knowledge is there. They know what coverage is there. They should know those policies really, really well. They should be good resources for questions, good resources for what can I do if this happens, how can I mitigate my loss, how can I, because they have, that kind of big bucket behind them, that big vast resource behind them of knowledge that exists with the actual insurance carrier. However, there is also a very potential significant downside that exists in that in the event of a claim. In the event of a claim, an independent broker should be taking a very independent view or be your advocate with respect to that claim and with respect to your loss and with respect to everything that might be due and available under the policy. And not always from a non-independent broker perspective are you getting that same viewpoint. That's not to suggest it doesn't exist. It's just in experience, it doesn't always exist in that same realm. That could be an issue. Second thing or another area that comes up is insurance values. And this one's quite important because this is the one we see all the time where the policy wording and the policy values that have been attached, in other words, the limits that are put on there are not right. They're not appropriate. But it is not the broker's job to set the value. It's not the broker's job to set the limit. It's your job to set the limit. And unfortunately, you may or may not know what limit to put onto those policies. So it can be a very tricky area. It's certainly not one where the broker, they'll give you a BI worksheet, or they'll give you something to fill in to find what that value is. And they almost always lead to a wrong result, which is unfortunate and only known in the event of a loss. So it is something for sure to be aware of in terms of determining an accurate insurance value if something were to occur, because we see in many cases with respect to the industry penalties called a co-insurance penalty. In other words, if you did not purchase enough insurance in the event of a loss, even if that loss is below the limit, you get penalized, and you don't collect on the full amount of your loss, you collect on a lesser amount because it was deemed that you were underinsured. So that's something absolutely to be aware of in that, and to consider with respect to the role of a broker, because it's actually a very important role. And I just wanted to end with the fact that it's highly variable in terms of the what is provided at the table with respect to brokers. So the topic du jour right now, the topic that that everyone is concerned about and matters to everyone right now, of course, is COVID. And this again is a worldwide issue, not a particular area's issue. And what I started off saying before is that not all policies are the same. And if all policies were the same, you'd probably get one answer and be able to drive on quicker, but they're not. Policies are different. There is wording changes. There is one word that can make the difference in a policy with respect to especially this area of COVID. And therefore, there's a great deal of uncertainty. For the most part, companies are being told you don't have coverage. And if I was to generalize, which isn't very accurate to do, but if I was to generalize across a broad swath of policies and a broad swath of wording, there's some truth to that it is not a bonanza of collecting COVID and getting a big check and driving on. However, the opposite is also true. The answer to that isn't always no by any means. It's not no. And we are calculating COVID claims right now for businesses in the sector and in the area, because their policies are written, and most policies are written for a knowledge perspective, called an all risk policy. And an all risk policy means you're covered for everything except what I exclude. And therefore, what is excluded matters a great deal. So the good part about those policies is they start off with everything in, and then they individually pick things out of the bucket. And those exclusions, if you look at them, can vary quite a bit. And again, not consistent per policy. Some might outright say excluded pandemic. Some might say communicable disease is excluded. Many don't. Many don't have those specific words that exist into their exclusions, and therefore you have to read them in, or you have to determine whether they are or are not in there. And that becomes quite well, as of right now, an exceptionally important topic as to what is not out there. Generally, of course, underwriters are first point of contact saying no, and that is pretty well universally true. And the reason why is probably twofold. The reason why is one, it's not hard to understand that one restaurant loss in Fort St. John is the exact same as 1 million restaurant losses across the world. It's the same thing. It's COVID. It was, why does that business have a loss? The exact same reason that 1 million other restaurants do. So I can't cover one without covering 1 million of them. Therefore, I'm going to protect that one pretty hard, regardless of the dollar amounts involved. And probably the second thing, a fair comment to make if I was to defend the insurers for 1 second, and that is that it wasn't, it's meant to cover acts like fire, floods, earthquake that are not worldwide phenomena. They generally weren't written to be a worldwide phenomenon. And there's very few events that are a worldwide phenomenon. They're meant to cover unforeseeable acts that occur that obviously cause disaster, catastrophe. Certainly COVID did, but it did on a worldwide scale, which is different than is generally considered with respect to the policies themselves. However, that doesn't mean that it was excluded, and that doesn't mean that it was outright excluded in their coverages. So here's some of the potential ones that exist. There are others, but I just want to touch on these ones for now, kind of starting with ranking in order, if you will, with being the easiest to the hardest. So event cancellation, I'm sure everyone recalls or heard, those are specifically people, I'm not sure why they're dancing in the slide, but they're specifically events like Wimbledon that had a coverage that are directly written to say, if that event doesn't occur because of a disruption to it, then that will be covered. And those for the most part, event cancellation insurance has been covered, and it has been a yes from the. There's exceptions to that, but it has been a yes from the insurance industry. However, event cancellation is not exceptionally broadly used in many companies. It's only used in a few companies. So once you then get down to the second level, is called civil authority. And what civil authority is essentially a cover for a government shutdown, and not, that's COVID. So the government put a shutdown order either to a business or to a camp or to an action, and you cannot operate, you cannot run that. You don't yourself have a physical damage to your location, but you can't operate it because the government shut it down. That's called civil authority. And the issue with civil authority that the insurers are defending against in their realm is that the trigger of the civil authority has to be a physical damage. And this becomes the topic that is going before all courts right now. And the UK has brought it up on an expedited basis, as is all the different states in the US. And that is the determination of is COVID, is the presence, is a virus, is that a physical damage? Certainly the presence of a gas on a site has been determined to be a physical damage in the courts through the years. So the question is a virus a physical damage to a site? Does someone have to be there who carries it? Or what becomes that determination as to whether that exists or not? Civil authority has had, again, where it's not been excluded or not had those words associated with it, has also been covered in certain circumstances with respect to COVID. But the important thing to keep in mind is that that is always a time-based coverage. Oftentimes, civil authority might be a 2-week, it might be a 30-day coverage at the extensive side of it. It generally will not be past 30 days. So it will just be, it's very much a smaller time-based coverage, which leads to the last one, the business interruption, contingent business interruption coverage. That coverage is generally for an entire year. There's a 12-month coverage associated with it. But of course, the issue with that one is somewhat the same with civil authority, in that the trigger for that business interruption has to be a physical loss. It has to be a physical loss either to your site, or in the case of a contingent business interruption, it has to be a physical loss to a supplier or a customer, where they have actually sustained a physical loss, causing you to sustain a business loss. So the reason why they're not, unless you're tracking the news, or unless you're tracking the cases very closely, the reason why it's not broadly coming out is because, again, the variability of policies. So some leave much more room for these, some leave no room, and there's nothing to pursue. It is clearly excluded. and therefore and because of the impact of so many businesses to such a broad area, it's going before the courts very quickly on an expedited basis. Some governments, as you know, are trying to force insurers to cover. That, of course, is met with resistance, and that is also going to be an avenue that comes up to the extent that they can force an insurer to cover an issue. That may happen in a time period. Otherwise, the actions of encouraging our government to help us and to keep us in operation is obviously at play. But I'm just focusing on the insurance side of the world. So this is a exceptionally important area. It's not, again, clear. I would love to give a black and white answer with respect to do you do not have coverage in there, and the answer, of course, unfortunately, is it depends. But I think in many cases, everyone is or many people are outrightly told no, and that may or may not be the case. I also know some businesses that have been told no and are very willing to go in for the fight. So are very willing to put the claim forward, knowing that the insurance carrier has and will say no to it, and then you're left, with a further step, which is an action against the insurer. So that is also taking place to some extent for businesses. So I will stop there in the interest of time and the interest of addressing some questions and some areas that people have. Again, it was just touched on, so there is more depth to anything, but I would certainly, subject to Jennifer's comments, open it up for questions and comments.
Yeah, thanks, Craig. That's a great overview of a complicated and not well understood topic. We do have some questions in our Q&A, so I'll just start top because I think we have time to get through this stuff. So the first question is, who are some of the best insurance providers for BC operators?
Yeah, that is a tough question to answer, and the reason why is, at the end of the day, there's domestic insurance carriers, and then there's international insurance carriers. And what you might not know is that even if you had a domestic carrier, even if you insured with a Chubb or a company like that, what they do is they take that risk and they reinsure it themselves. So insurance companies also insure their risks. So they take that risk and they will reinsure that with another insurance company, and it kind of it carries on like that. So at the end of the day, the name on the policy may not actually be the one who's paying for that loss, and therefore, because of that, it's tough to distinctually say one is better than the other, because they don't have that consistency. And the other comment I'll make in it, having seen all the carriers for all the losses, is it really is also not consistent in the same entity. So it really matters who that claims examiner is, or who the person actually is with respect to your loss at that company, because the person in the chair beside them or the person in the office beside them might, in the same set of circumstances, might not come to the same conclusion. And that is exceptionally true with respect to carriers. That is not always. Much of insurance is gray, if you will. Like it's not where it's black and white. I'm sure that's consistent across, but much of it is gray. Policies are written so that they're not made to be really clear, and they're not made to be really clear because they have to apply to every business in every area. It can't be clear because it would never apply to all the businesses in all that area. So therefore, you're left with this giant pocket of gray that isn't treated the same within the company. So that is something to be aware of as well, that you might have had a easy go, if you will, with a carrier on one claim, and it might not have been on a second claim. And that is to some extent due to the variability within the companies itself.
So Craig, this is something that, I talk with my parents about as insurance became a reality in my life. And the importance of researching your underwriters. So the name that's on the policy or the person who's potentially the company who's going to potentially pay it out. How do you do the research on them and find out what their, what the payout rate is, and are they easy to deal with? Where do you go for that information?
Yeah, they're all of the underwriters have to report their results. So all on their websites, as you would go to any entity's website, and you would look at the data, the financial side, or the releases, the news releases of the information on there. On those, you will see their loss ratios. You will see what they've paid out in losses. What their investment returns are. They're not super easy to read, but it is there. That information is there. Beyond that, because it is so different by individual inside of that entity, it does tend to help. And I don't use this very often because I don't love them, but forums that comment on who is good and who is not good. If you're in a particular area, you can glean a lot of information from those in terms of comments about who is, who've had a good experience in that regard and who hasn't had a good experience in that regard. The caution I will give in that, and unfortunately I've seen this now, is what was easier to get through before COVID and what was just a claim, even if it's a fire claim or even if it's a non-COVID claim, claims are harder now, period. And they're harder because of what COVID has done and the implications of it and the potential implications of it to those carriers. So even a small and a simple claim that existed before can be harder now than it was even 6 months ago, or than it was 8 months ago, and it's all because of that reason that has happened there. So very tough to say one is better than the other, and that you should go with them.
Awesome. Our next question is, if brokers aren't really responsible for determining insurance values or limits, because it's really the customer's responsibility, but the methods for determining the values are usually wrong, what are the options for the customer? Find a better broker with better tools, overestimate so you're overinsured, taking the risk?
Yeah, well, I will do a tiny commercial plug, but that's not my goal in this. But because we see where the values are wrong, we do that. So we calculate as independent consultants what a insurance value would be for businesses, but not everyone is going to do that. Not everyone's going to undertake that. Not everyone wants to have that process occur. So really the best thing that you can do in that regard is to look at your own results with your accountant and look at it through the eyes of what would happen if a loss occurred, and start with the revenue and say, if a loss occurred, let's assume a fire for this sake, let's assume a fire occurred, our revenue goes to zero because we're not operating. But then you go your cost side of it, and that's where values get tripped up all the time, and especially with respect to the worksheet where they get tripped up, is because costs act in different ways in the event of an incident and need to be understood as such. Some costs go away. If you manufacture a widget and you're not producing a widget, the cost to manufacture the widget goes away. So some costs go away and go to zero. But there are other costs that have very different outcomes for them. Some stay the same. So a property tax or even insurance cost, whether your business is operating or now, you have that cost, you have that fee, it's staying the same in the event of a loss or not. So you need to cover that, if you will, in your insurance. You need to cover those costs that continue, and some other costs actually go up in the event of an incident. And When that happens, those need to be covered as well. And those are in the context of what's called extra expense. So costs that are increasing due to the incident itself, and also due to your duty to mitigate. So in the event of a loss, we all know you can't throw your hands up. You have no choice but to mitigate, and you're held to the standard as if you did mitigate. So if you didn't reduce your loss to the extent you could, you're held to the standard as if you did. It's hindsight, so it's not a perfect determination. None of us can see the future, but that is also to be considered as extra expenses. So that's the kind of the shortest, best definition I can give, but I think that question is very valid, and more to be cautious of it, because the broker won't do it and probably shouldn't do it. They're not accountants. And also that BI worksheet, if you just blindly put numbers in there that it says, it can lead you to a very wrong result. So that's my caution in that, and to look at that through those eyes with your accountant would be the best advice I could give.
Thanks, Craig. The next question on our list is, do you have advice on how to determine if my broker is right for my business?
That's why I gave the roles, and to look at those roles through your eyes to determine whether you're receiving that or not. It's important to, some are very good speakers, some are very charismatic, some are super people person and really good at that, and that's a good thing, but that's not the only role. And it is important to consider along those roles whether you feel that you're getting value. You're at a disadvantage because you don't know what the broker knows. That is completely true, but you can still consider it through each of those roles, and still consider whether you believe that you're getting the value from them, and you can dictate by the answers that you're being provided. And if you want to, you can call another broker, and I guarantee you they will be super happy to take your call and be very super happy to answer those questions that you have of them. So I can't say who's good and bad, but to look through those eyes of the roles. And if you feel like you're potentially not being well served in that regard, to pick up the phone and talk to another broker. They will very, very readily take your call and want to talk to you about that. Even if you don't choose to change brokers, they'll still answer those questions.
Well, that leads right into our next question, which is, who would I go to for an independent review of our insurance and insurance broker other than another broker?
Yeah, that's right. And another broker isn't completely independent because they want your business. So that's not, what you can do is try to glean information just like you would do on any particular topic, like you would do if you were to go buy a car. You're learning what you can learn to make you comfortable. You will never have perfect information of whether that car is going to be reliable or not, or whether your car is better than that other. But what you do is you're gleaning the information that you can for you to make the wisest decision that you could. So I would be armed with those roles, and I would talk to the broker about what is their response to each of those roles. What do they do in them, and is that making you comfortable? Because I think we all can say that unlike a massive billion-dollar enterprise, that because brokers are paid by commission, they're paid by a percentage of that policy, of course. I might expect to get an incredible level of service out of a billion-dollar company because the associated insurance premium is huge, and the associated commission to my broker is very, very large. If I am a small operator and they're taking a 10-15% of a premium, that's not a lot of dollars, and therefore the associated services that you get are not going to be to the same extent. So that is also a reality that exists in there as well. Having said that, there are some very good, very active very knowledgeable brokers, and that it's also unfair to point one over the other, because it really matters who your account executive is. You might have a broker, and that broker has 3 or 4 or 5 or 10 account executives, and those account executives aren't all the same within that broker. So it's I can't name names, just arm with advice and methods.
So it sort of leads into the next question, and wondering if there was a resource, a list of common questions that we should be asking our brokers. Is there a place to find that someplace?
Good question. Very good question. I have not seen that. I have not. I imagine with enough research that could be found, some of the good questions to ask your broker. You could also, as a starting point at least, take those roles and bring those roles before your broker and see where that communication leads, see where that discussion leads you to. But there would be resources, I don't have them readily available, that would identify questions to ask your broker to determine, how good they are, if you will.
What are the options if their broker is having trouble securing underwriting for a renewal or a policy?
Yeah, really very, very good question. And there are not very many options, except one to be aware of is to potentially talk to another broker, because some of them are tied into certain markets. Some brokers are tied to a certain market, and just because that market doesn't offer it doesn't mean that another market does offer it. So that is one thing to be aware of, is that it is possible you'll get a different answer from another broker with respect to the coverage. But the second comment I would make in that is also true, that there is a significant reduction in the coverages in those areas, and therefore, the broker very well may have gone to every possible market and still come back with no, or still come back with okay, but I don't want it, so it's really going to cost you. So that just because the broker's news back is not very positive, that we have seen that in many different areas and sectors where their underwriters are just not offering it. Period. They're not going to offer that.
Thanks, Craig. A question from Jillian. We are a tour operator. Our latest policy requires that every supplier, restaurant, museum, guided activity, carries a minimum of $5 million general liability. This coverage is really achieved by smaller tourism businesses, which threatens the diversity of our tourism product. Is this becoming the standard? Can we push our broker to negotiate this? And should all businesses be carrying it at that level?
Yeah, in the scheme of operators in industry, 5 is on a relative scale high, for sure. That's not what everyone has. That's not commonly done. But I have absolutely seen those requirements put in place to have that level. So I guess 2 things. Yes, you can push the broker in that area. And to the extent you don't have to carry that magnitude, that would be good, because obviously the higher amounts, the harder to get. That's not a surprise. So if you don't have to hold 5 and don't, from a risk-based perspective, that is not a justified amount, then I would back on that and to not have that level in place. Certainly other businesses have 5, so that is not that it's uncommon, but the majority probably have less than that.
And we have one last question, and that way we can field all the questions that we've got here. Regarding this civil authority coverage, does a business need to be specifically named, or rather than a blanket category shutdown?
No, blanket category shutdown is fine. A blanket category has happened all gyms, right? All bars and restaurants, all of those are caught in the government order. And the insurance carriers themselves, of course, with direct interest in this, have all those orders. So they have those, or they have when those orders were put in place. To what businesses do they apply to? So no, your particular business or entity does not need to be named in that. If it is covered by the order, then that's the trigger, if you will, for the civil authority for sure. My only caution would be the comment I had before is there is a government order that creates the shutdown for sure, but often it requires it to be a physical damage that caused the government shutdown. And some insurance carriers will say that's not a physical damage that happened.
Well, that wraps up all of our questions. I just want to wrap up the session and say thank you so much, Walt, for the important work that you do on the advocacy end, and as tourism operators, certainly getting those problems to you so that you know that those higher level challenges are, and you can advocate on those behalf of the operators on a higher level. And Craig, the incredible amount of knowledge that you shared with our attendees today, and anyone who watches the webinar in the future off the Tourism Resiliency website. I hope they're better armed going into their next conversation around insurance. That's not something that anyone really wants to talk about, but sometimes our hand is forced. So thank you so much for taking a little bit of time out of your busy schedules and sharing your wealth of knowledge with us. So I have included everyone's contact information in the panelist contact information in the chat function. Within a couple of days, this webinar is going to be loaded up on the Tourism Resiliency website, which is tourismresiliency.ca. If you had to step out for a moment, we all know that when we're, our work environment's been changed a little bit, and there are all sorts of new distractions in our life, pets, children, all sorts of things. So that information is there for you. You're going to get an email. There'll be a pop-up screen. We ask you to fill out a survey at the end of this, just so we can make sure that we're giving relevant content to everyone. So thank you so much for joining us today, and have a lovely, lovely day.